I'm sure you.
Morning, Annurag.
How are you? Good to see you. Srinath, first of all, it's been almost 11 months since COVID. How has it changed how has COVID changed the professional financial services domain? How did overall markets, we know the markets are an all-time high, 2 crore new investors have been added to the market. We know that the top lines of a lot of corporations may have shrunk, but for a lot of corporations, their bottom lines have become better. We also know that the Indian consumer has saved a lot because he or she has only done essential expenditure. So give us a sense of what has changed and what has stayed the same.
So I think very, very importantly, the COVID lockdown has kind of removed the digital barrier. I mean, with a vengeance, the market, whether it's India or Bharat, has embraced digital. And if you look at on the supply side, which is all the banks, the financial institutions, which were catering to those customers who were probably, some of them were struggling to get onto the digital projects, today don't have a choice. I mean, there is no more parda to hide behind saying that I've not got board approval, I've not got capex, I'm not able to do it. Today, the consumers demand digital access. And which is what we are celebrating in this festival, right? The FinTech festival is all about celebrating access to digital. And I think the genesis much before COVID was the India stack. India moved on to the Jam Trinity with Jandan, Aadhaar and mobile. These have been a very, very powerful backbone that India has got the last few years. And if we can say that we have almost become geoification of India. Almost everybody has an handset. Almost everybody has access to digital. And with also government initiative of putting public Wi-Fi all across. So what has COVID done? COVID has been a great catalyst to one, shed cost, to shed the traditional, I think the overhang that we had as conventional financial institutions. And if I were to simplify it further, FinTech, what is FinTech? FinTech has been marrying technology to break barriers and mental blocks. And we are also making it very, very simpler to be regulated. More important in the financial services business, you have to be regulated, and going digital allows you to have an audit trail, which the conventional financial services institutions could not have, and it was not easy to supervise. And as you rightly said, I heard your opening remarks. So we have been speaking about the underpenetrated market bank. I mean, how many decades of boring presentations we would have given as an industry saying that India is underpenetrated market, India is underserved market, underbanked market. Thank God, I think we have digital and we can move that needle quicker. Probably the next 2 decades, I believe this is the decade of India globally. The next 2 decades can have a far meaningful financial impact on our markets.
Thank you, Srinath. Now, let me ask you, again, FinTech is a very broad term, right? It includes myriad players. It includes various needs being served by FinTech players. If you had to kind of put a context to the kind of niches available, the kind of sweet spot available, give us a sense of what's happening in it. So there are FinTech players that are solving, very simple problem of, consuming, connecting the merchants to consumers and to a bank. But there may be no money or very little money there. So they've used that to acquire customers and then serve some other needs. There are FinTech players only in the education segment. There are FinTech players that are focused on, very specific niches. Give us a sense of what these niches are and which are these sectors and subsectors you see growing in the next few years.
Sure. I think I'll oversimplify it here, Annurag. As a consumer, what do we need? We have typically 3 financial needs whenever we look out in the market. When I say consumers, I'm talking about average individual. I'm not talking about institutions. We want to borrow for a reason. We have some surplus money. We want to invest it, and we want to protect ourselves, our health, our family, our property, buy a car, whatever. And financial services actually established around the similar lines of what I call LIP. L for lending. All the lending institutions come under RBI. I for investments, they come under SEBI. P for protection, which is what insurance is supposed to be. I have a very, very strong view that insurance industry should be all about protection and not about investments. And we've had some spat in the market a couple of years ago on that. So I think very, very clearly, even the regulatory landscape is clear. How do we safeguard consumer interest for anything that they borrow, anything that they invest, and anything that they invest into or protect themselves? So if you look at the FinTech space, all of them, FinTech again, I think we must be very, very clear, is also regulated. Most of the large FinTech players are backed by solid, high credibility investors, be it HNIs, individuals, institutions, or funds. What does it mean? It means a great amount of comfort because you're trusting a lot of your data with those platforms. And we will have to demystify that FinTech players are not just sheer fly-by-night operators or platforms. They are here to stay. They're regulated. In the lending space, most of them own their own NBFCs, which are licensed. In the insurance space, they're solving a problem. So what does it mean if I were to say lending, investment, and protection? It means any platform in the FinTech space is one, communicating with the customer and aggregating them. They're creating their own community if they're a platform. Two, they're giving you product choices and services. Now, to me, that is very, very important because we have been speaking the mantra called financial inclusion. Any inclusion is nothing but giving consumers choice. And India is a market where we also have to give them liberty to reject those choices if need be. Let's say most of us on this conference today will be chased by enough people to get the fourth or the fifth credit card or the sixth bank account or a wealth management account. Let's for a moment go 100 kilometers outside of our cities that we live in, and do those consumers have choices? And I'm a firm believer that FinTech will make those choices happen for only one reason. Amount of data that you can collate about those consumers and their behavior and understand the risks that you undertake. Finance is nothing but pricing the risk. And we have kind of overcomplicated it by using jargons. We'll have to simply say that we price the risk better. And my belief is FinTech will be able to do that.
Okay, Srinath. Now, I want to take one context. I moderated two panels. I was speaking to two sets of leading players. And one of the things that, I asked them, what could be the multiplier? What could be the game changer? What could be the innovation? And both of them were talking about the application of blockchain. And application of blockchain is cryptocurrency, right? And I said the only problem is that the central banks and the government may want to control. And you saw that there is now a fear of a legislation being brought where the central bank will have its own cryptocurrency. Now, tell us, how do you see this development?
See, I think one of the challenge or the objective of regulators in a market like India, if I were to generalize and compare it with other regulators, is to protect the interest of the common man. And here I use the word common man with almost alluding to the lowest common denominator possible in terms of economics. And that is one of the regulatory handle that they have. So which means it may not be necessarily at the cost of development most of the time, but at some point in time like this, you would also have challenges where they would say, what if a common man were to be impacted? And that dilemma we will have to face. And in crypto, for example, we are actually confusing.
And if I may just say that the government also wants to err on the side of caution, that the consumer, the investor shouldn't be, taken for a ride. So it wants to be safe. So there is also a good intent, right?
There's absolutely a good intent, absolutely an inclusive intent, but there are other ways of making this happen precautionarily. My belief is sometimes by simply increasing the threshold of investments or the money is being played, you might actually segregate the low income group, the middle income group, and the HNIs very, very easily. These are very, very easily doable today with available technology, not just with FinTech, but also with the conventional financing institutions. If you look at what is the concept of Aadhaar done, and if we use, let's say we're all talking about only blockchain and cryptos, one of the most powerful data format that not many people have given credit to RBI, it has been using it for years, is the format of XBRL. And if, let's say, all the financial services institutions and regulators follow the same format, which means supervision becomes easier, proactive supervision, and flagging off of any alerts can be almost real time, if not even before, using trend analysis. So I think we are challenged because we have multiple regulators, and a lot of times we just play that inclusive card, and we forget that there is one sect of community which has surplus money. If you don't allow them to invest here, they're going to find other geographies to go. We truly are in a global village, to use the old phrase. So if you stop an Indian from investing in India, today you can probably get a visa or a work permit or residency permit to move somewhere. And we will also see flight of capital, not just about brain power, unfortunately. And which is why I always say...
And Srinath, the big question is what happens to the existing investors in those cryptocurrencies, which runs into lakhs, more than 75 lakh investors.
See, there are only a couple of things possible logically. One is you ban and whoever has invested gets hurt. The other conversation that we've been hearing the last couple of days is there could be some kind of grandfathering allowed, which means you might be given a reprieve in terms of time limit by which you will have to book your trades and get out of those. But again, more importantly, going back to the fundamental question, this policy yo-yo at some point in time has to be addressed. 2 years ago, it was banned. About 2.5, 3 years ago, it was banned. Then the Supreme Court opened it up last year. And again, we are moving to ban it. And there's a fundamental difference. You have something called blockchain, which is the foundation for this. And crypto is one of the products. And you're saying, I want one and I don't want the other. And you're also forgetting that there are also private cryptos, which is closed user cryptos. And there are also publicly traded cryptos, which is almost like your digital fiat. And we will have to get down to this. Is there expertise available in the country? Yes. Is there those expertise available within the regulators? Yes and no. And I think it's time that we relook at this. The new age is, the reality is the digital fiats. There are countries which will issue its own crypto, and that's a reality. But again, the point is, what is the underlying asset? And I can understand the regulatory framework. On what basis is it mined and what basis is it pegged at? Is there a fallback mechanism? And I understand. But the bigger challenge is, is our regulator, do we have an economy which is digitally fully integrated that we can actually track this? I have my question.
Okay, Srinath. Now let's move into the future of FinTech. Now, again, India is possibly in a space where in the FinTech sector, we can say we have leapfrogged. We're ahead of others in the way we are doing things. Normally we follow America in technology, in service-oriented concepts. But we can genuinely say in the FinTech sector, we are leading the world, both in terms of numbers because of the kind of population we are impacting and in terms of, ideas, offerings, and business models around them. Now, if you had to, in your experience, give us examples of course, I'm not leading you, but NPCI is a big game changer, and that's where it shows that, Aadhaar is a big game changer, right? Bureaucrats and policymakers can make a positive impact and create a base for everyone to kind of grow on that. But in your view, give us examples of as many disruptions or innovations that you think will create a huge impact of companies, of ideas, of kind of offerings.
See, I think when we talk about disruption, first of all, Aadhaar, it took us many years of political opposition, yo-yos finally to come through. And today we are leveraging it brilliantly well. The very fact that if I bring that integrated to the mainstream financial services, it has disrupted the way we think, the way we bank. I don't know if anybody has done a survey of millennials and Generation Z. How many of them have actually gone to a building or a branch called bank? I don't think so. The fact is, everything is available on the phone. And one of the other data point that we should remember is, while we all speak about literacy and financial literacy, India is more keypad literate than literate. I think that's the biggest disruption. The mobile, the smartphone available at cheaper cost, to me, is the biggest disruption that India has had. And I think that's an advantage that we're using. I know of enough cases where somebody does not understand how to type, but they do a voice record and send it across, which means the communication happens. Will fintechs use these? Of course, yes. I think today we have enough AI, ML platforms which are able to convert voice to text, text to voice, and use it for decisioning. And I think these are the points that they will end up using. Going back, are there been disruptions? To me, again, UPI was a big disruption. Of course, the jury is still out saying that if actually the banks themselves came to set up NPCI, why is that regime being dismantled to bring private competition into that space? I think the jury is clearly out, and I have my own personal view on that, which is very different. So if you are building something which is for the common good, and if you're almost like an open source opening out for others to use, can you build more?
And there's a level playing platform for every player. It's equal access. It's the same thing available. Now it's your ideas and your business model on top of it.
Correct.
And in most cases, Srinath, when we were talking to players yesterday, they're dealing with the same set of customers. They have the same data points. What can they do with those customers and what can they serve them innovatively and do innovation in the business model that will help them build a business around it is the key. So, they're playing with the same set of consumers. Go on.
So I think very, very interesting, right? I mean, India is one place where everything, we have always fought with 1:75 for every rupee to a dollar. And is that going to change in the short term? No. Which means frugal innovation, which means your cost structure. But the advantage that India has is plethora of volume of population. We are not only 1/6 of the world's population, but we don't have 1/6 of the world's wealth. So if I were to be very pragmatic for FinTech platforms, what do we have? We have two things. One, we are an investable market, which means investors globally want to invest money into the country. Other is we are a consumer market with so many people. They want to be here, they want to partner, they want to do something to actually address the market. Cost is going to be very, very, very critical. Of course, I see in the last 2-3 years, even without the COVID, there have been cost structures which have been increasing even in FinTech players, and I think that has to stop. That has to stop because...
And cost, if you're talking about the cost of acquisition of the customer.
Cost of acquisition of the customer, cost of the payroll of the FinTech platforms, cost structures within the FinTech platforms, they will have to think very, very differently from the established players. Just because you're been well funded or you're getting into the unicorn status, you will have to still think frugal. I mean, you can't just jump saying that, valuation is a number, it's an emotional number. As long as...
It's vanity. It can be vanity. It can be real and it can be vanity.
It is vanity because without cash flows, without profits, at some point in time, let's say if there is some other global crisis or the money flows into the country, moves to some other market, what happens to you? Do you stop serving a consumer or do you rejig your model? So it's better to be very, very frugal. I know of lots of founders who have, despite 5-6 years of building a successful company, are far more frugal than they were ever before. And I think that's what is making Indian FinTech so much robust and strong.
Fantastic. Now, yesterday I asked some of the players that if you are growing, then you are clearly eating someone's lunch. So is it the bank's lunch you're eating? Whose lunch you're eating? And they said, no, we're growing the market, which is also true. But at some stage, do you think banks will catch up? They also mentioned, and which we can see, he said the banks as they exist today may not exist 5-10 years from now. And also your neighborhood grocer, your car may become your bank, just to exaggerate a point. So tell me, whose lunch are the FinTech companies eating?
See, it's like this, right? I mean, if you have a simple a la carte menu, fixed lunch, your quantity is limited. But if you're on a buffet, you are actually expanding what you conventionally usually eat and you're eating slightly more. FinTechs are doing a combination of both. Whose lunch would they take? At the cost of sounding, let's say, like an irritant to the established conventional brick and mortar financial institution, I would say FinTechs are going to eat their lunch. Even if those institutions have the ability to fund digital thinking, I have this proposition. The demographic dividend in India will grow and solve consumer issues with new thinking that FinTech entrepreneurs or any entrepreneur, the tech entrepreneurs or the startup community in India is doing in the last few years. What if, I'm surprised that the conventional BFSI players are not thinking this. What if they themselves, the way they are structured, the way their processes and their thinking is the actual issue for the consumer? You want to address something, it goes through layers and layers because they have 300 branches. Whereas in FinTech, you crash all those boundaries and say, can I figure out the quickest way to solve it? So I think it is going to be at the cost of the conventional player. But having said that, let's say the top 5 in each of these players, each of these markets, be it insurance, asset management, wealth management, banking, lending, will figure out a way to partner. And from a very, very long-term perspective, I sometimes shudder to think about the concepts of, let's say, the co-lending model. if both brands are predators wanting the same customer, at some point somebody is going to chew the other one alive. I mean, I think that co-lending model concepts like that sounds nice today, but somebody is going to learn more about the other partner than the other one. And I think those practices will stop. So it is going to be at the cost of something, and which is why my request from fintechs would be very, very frugal at your cost. At the same time, keep disrupting yourself faster than the competition can disrupt you, which means learn from the consumer every single day. Consumers, let's face it, as a market, we've been starved for choices. If we get choices like we would get now, I don't need to be loyal. I'm going to experiment. I'm going to be what I use the word as not disloyal, but unloyal, which means I'm not being disloyal to you, but I want to try something else. And in that game, it costs money, it costs time. Fintechs should be able to learn much faster than the consumer.
Okay. Now, Srinath, let me move into the policy framework, the risk associated in fintech. We talked about crypto and blockchain. And of course, the government wants to safeguard interest of the investors and be cautious, because if there is a gold rush, it does attract sometimes not the right kind of players who may not have a long-term intent. And, we saw what happened with some subprime lenders, they came to India and so on and so forth. So government rightly takes cognizance and act. But what are the policy risks associated with the fintech sector? And to the credit of the government, I would say the government has done an outstanding.
See, I think there, just to give you before you get on with your subpart 2 of the question, I see this one. The last few years, each of the regulators in the financial services have come out with a very proactive sandbox approach in terms of experimenting with newer ideas, which is like almost containing the risks that it could contaminate the ecosystem. But again, if I hear the market players, the fintech entrepreneurs, I think we should probably expand the sandbox regulation itself and probably bring in a different set of expertise who will select those sandbox approach. It cannot be only from the regulatory lens. It also should be from the consumer and the technology space, which means that in any sandbox regulatory panel that the regulators put through or the government puts through, can you have technocrats? Can you have business folks? Can you have policymakers? Bring them all together and almost like mentors, can you champion the cause of Digital India? Don't just gate it saying, oh, if it doesn't meet this, I'm not going to allow this. I think that would be a proactive step that they could bring in. Can they do faster and better? I would think so. But again, the conventional step is they understand their own challenges and they have their own set of priorities which they have to do. Definitely in the last 5 to 7 years, Digital India has grown phenomenally. If you'd asked me then, I would have said that fintech ecosystem, entrepreneur ecosystem would grow despite the regulations. But I think today they've proven very, very clearly that they're able to grow, take along the regulators. And sometimes I just feel if there had been a little younger voices on the other side of the table, and again here when I said the table, it is more a context of a circular table, not the rectangular table where it's one side, us versus them. It's about that. I think all policymakers, regulators, and the industry should say that we are seated in a circular table. There are no sides. All of us have a view, and we are all solving the same problem, which is how do we expand the consumer base. And I think that mindset change, I hope we get soon instead of us versus them. The consumers will benefit.
Fantastic. My last question to you is, when you see the fintech industry in India, and I would say it's still at early stages, though we may have leapfrogged other markets. But if there were things that we could do better as individual private players, as a private sector, what would those be? You already mentioned efficient use of capital, that we should not be using all the capital to only acquire customers. So what do you think we can do from here on? And clearly there will be a shakeout. There will be a consolidation in the sector. So is capital the differentiator? The players were raising from $100 million to $500 million. What will be the differentiator going forward?
So I would use the word, we have spoken about this, and BW has also done this by celebrating entrepreneurships, right? This entire festival is about celebrating entrepreneurs from the fintech space. I would encourage what I would paraphrase as collaborative competition. You might be bitter competitors in the same sub-vertical of fintech, probably trying for the same set of consumers or overlapping consumers. But can you collaborate in learnings about your failures, not necessarily your specific to your culture? If you can collaborate and yet compete, I think the fintech ecosystem will be far, far, far richer than just cannibalizing it. And I think the investors at some point in time, there are quite a few large global investors who do that, where they invest in both the number one and the number two in the industry, and at some point in time try to merge them or find synergies. So I would think collaborative competition. And more importantly, can you figure out how to celebrate failures, almost like a buddy system? So that if you fail from something that is an industry knowledge, can you share with others so that the rest of the industry doesn't collapse?
Great. So you're saying collaborative. I keep saying, Srinath, we're in a collaborative economy, we're in a contactless economy, and we are in a compassionate economy. I keep calling it the 3C economy. So, because of what you said in terms of celebrating failure, of course, when you do product innovation, when you experiment with a business model, you are trying to search for that perfect, business model, the perfect product, which solves the problems of the consumer. Now, my question to you is, as we go forward, give us your top 2-3 predictions that you see happening in the fintech sector. You've been part of large financial services company. You invested in startups. You've seen this ecosystem. You're part of the FinTech Association. So give us, going forward, what are the 2-3 changes you see happening?
So I think the way people look at finance, will it move overnight to digital finance, cryptos in the world, across the country? No. We have to understand, if you're going to live in India, and if you have to work with Indian consumers, there will always be different stratas of society, community. And I don't mean only from the socio-economic factor, but also the way they perceive money. It will be very, very different. So if you're a fintech player, be ready for change, be ready for daily change. It's almost like, can you update your business model very, very frequently, not just once in a year or once in a year. 2, I think very, very clearly, I see digital has multiple voices. When I say multiple voices, it comes from the consumer. You have a set of consumer. India is one of the largest base for what I call the GEMS economy, right? GEMS, the gig economy, M for millennials and Z for the generation Z. Each one of them are having an impact in the way we do business and the way we live as a society. So what does it mean for the fintech players? Can you address them? Each of them relate to products very differently. Each of them have their own need. Each of them have their own time convenience. So how are you going to customize to each strata of society? And yet at the same time, you will have non-digital natives like you and me, Annurag, who never, until we grew up, we never saw what the computer was. There was nothing called mobile phone when we grew up. And yet we have adopted to the digital world. There is a context to it. So fintech has to be very, very respectful towards this. And of course, today I see the differences between India and Bharat almost kind of merging with technology, and it will improve. And which is why I'm very, very bullish about the India stack. It has really brought India far, far, far closer. Today, it's very, very heartening to see during the COVID lockdown, families bond over video conference, families talk. They may not be literate at all. The fact is, it is brought.
Just to build on, yesterday there was a player, they said, we've done all our KYC through video very fast. So, you're talking about video KYC. Your KYC is very important.
So I think some of these trends will far, far, far merge. At the same time, we must understand that we are a global economy. So we cannot be very, very inward looking, saying India is this, India is that. Yes, India will be a very, very key player globally. But our economy, as we grow, I think fintech will contribute far larger to the GDP growth. Why only look at $5 trillion by 2025? Why not look at $10 trillion by 2028? And I think fintech can get that access much faster, because I think the true financial inclusion is when you make it available for all. And I think that's what will be a game changer.
Fantastic. Srinath, you have been both a player and somebody who observes this sector. Now, if you had to make a prediction about, let me use a larger context. GDP grows when banks lend, when there's more money is put out, which creates more money, right? In very simple way, right? Now, in the last 11 months, one of the complaints have been that the banks have been very conservative, while whether it's government banks, as in the public sector banks, and there is a disincentive for lending. They want to be cautious. Let's put it this way. Now, also NBFCs weren't getting the money, right? Or not the most conducive environment for them to get money, right? So tell us, do you think are we turning the corner on that? Do you see us changing that? Because unless until that happens, 5 trillion economy, 10 trillion economy will only be concepts. They won't get into play.
See, I think it's known that almost a lot of economists have spoken about it in the past, right? I mean, the current size of the Indian formal banking sector, which is about 100 lakh crores, has to at least double when we have to get to the US $5 trillion economy, GDP. And I think, which means that we need more and more banks. And it's not about banks, right? Which is what I initially alluded to. Despite having banks, we've always been using the same, the sympathy pitch, as I call it. We are underbanked, we are underserved, we are underpenetrated. Can we say, why not bring in more players who have patient capital and who have a track record to start lending, to start, it could be insurance, it could be asset management, it could be all kinds of products. So to me, in a broad nutshell, we need to have very, very quickly more number of players in the financial services space, which is regulated. And which is why I think I'm very, very encouraged if we can get digital players onto the mainstream. Today, let's face it, Annurag, while we celebrate FinTech, it is almost on the periphery. You're not treated as part of the old boys network. There definitely is an old boys network in the financial services space. And the FinTech is, while even if you're a unicorn, you're only on the periphery trying to get in. You've not gotten in. And that, I think, has to change. Then it will be very interesting. Coming to your specific question about, let's say, the credit sentiment, the ability to lend more, I think there are multiple issues, right? One, when COVID happened, something like COVID happened, if I were a listed company, my biggest fear is, do I conserve capital even if I don't grow? Even if can I shrink my balance sheet? Because end of the day, as a listed player, every quarter I'm answerable to the shareholders. There is an outcome expected. So even if I don't grow, it doesn't matter, people will understand. And that's exactly, you also see representative in the market. And of course, added to that, we also had the moratorium issue, which is still pending, and at some point in time, we will have an outcome. So if you bring in so many of those unknown, unseen, and suddenly thrust on you, and also from the demand side, if I were an SME and MSME, and I've been shut for 3 months, 4 months, and I have a backlog of money due to come in, and if you come and tell me, Annurag, as a banker, saying, why didn't you borrow money? My question is, what do I do with my old dues? Will I be able to recover? Is my current business viable? I think there are too many questions which are still open. And I think only with time, when I say time, now that we have started slowly opening up the economy, I think we're going to have this. The budget that we saw is going to create a lot of impetus on the infrastructure businesses, which is very good because capital will go downstream all the way to the rural economy. I'm hoping that the government will front load some of those expenses so that we can see the economy churn. And that itself sets a pace for the sentiment. So I think I would probably wait for the next 3 to 6 months for, I think, pre-COVID numbers. While some of the industries have already come back to their pre-COVID numbers, the lending business will come back then. And of course, you and I have chatted a number of times. There is almost the flavor of the season, right? Sometimes retail lending is very favorable and everybody goes gaga over it. Sometimes SMEs are the darlings. Sometimes corporate lending is the big flavor. And I think that is why we would need specialized, focused institutions. Can we have institutions focused only on SME and SME? Can we have institutions focused only in housing? Unless we bring in those specialized skill sets and focused players, we are going to have the same. If you're a universal bank, you will keep changing your flavor of the season every 3 months, every 4 months. And rightfully so, because you have a fiduciary duty to your stakeholders, equity holders who are giving you that capital. So that will be my view on this.
My absolute last question is a player. I'm enjoying the conversation. I know you and me have spoken about it, both on screen and off screen. Is your overall commentary on the budget? Because at the end of the day, the one thing that the budget does is to change the sentiment, to create demand. Demand creation happens through jobs. So when there is more jobs, people spend more. So, budget grows everything, right? Hence, also the FinTech ecosystem. So give us a commentary on the budget. What do you think the budget has got it right? What it could have got it better?
See, I think the budget got the fact that if you actually support infra development, infra growth or infra build out, the rest of the economy develops on its own. And I think there are enough examples like the US where you pumped in money into highways, railways, all along the corridor, new cities and towns develop, economic viability increases, and then you have sectors like F&B, hospitality, everything develops. I think we have also provided the similar philosophy. Yes, it's a great one, and which is why I'm hoping that the government front loads the capex, because it does take 6 months post those infusion for it to percolate to downstream. And if you do it sooner in the first quarter itself, first 2 quarters, by the next financial year is out, we would have sufficient money and sentiment improving. Of course, there have been a lot of conversations about debt market, developing the debt markets. I would be a little cautious. I would still wait before I go hip hooray on that. We have for decades, we have spoken about developing the debt market, improving the bond market. I think the jury is still out on that. So we cannot change that. On the personal taxation side, there have been a lot of expectations. People expected reliefs. Nothing is done. But I won't be surprised. This government has always shown that budget is not only one event day in the year. It has brought in policy changes where it has felt it is necessary to push the economy forward. So nothing stops this government from bringing in something at a later stage. Is this budget a good budget? It's a very, very proactive, good budget that I see it. Can something more be done? I think addressing the banking system to say that, can you go forward? I think that needs to be done as well.
Fantastic, Mr. Srinath, Sridharan, for talking to us. Thank you for being a positive catalyst in the financial services ecosystem. We wish you luck in your endeavors. And I'm sure when soon enough we are discussing FinTech again, a lot of what you said would have been implemented, and hopefully the FinTech sector will continue to innovate and disrupt itself so that nobody eats its lunch. So thank you so much. God bless you.